ascertain if we have a quorum. Everyone and introductions. I think everyone is here is with everyone. Any introductions needed at this point? So let's move with administrative items. November meeting minutes, page 2 of our agenda. Minutes. Are there any corrections or updates to the minutes? Corrections to the minutes. Okay. We can take a few moments if you like. Peruse. Okay, may I have a motion, please? What's your pleasure? Move for approval. Move for approval and second. It's been moving properly second. Any additional discussions? Comments? Here at none. All in favor, sign of aye. 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 All nay. Ayes carried. Minutes are approved. Thank you very much. Next item will be financial reports through December 31st, 2020. Start page 5. Would someone lead us through the financial report at this point? Go on, Van Dorn.
Turning to page 5, you'll see the profit and loss statement in its summary form for July through December 31st, so 6 months, halfway through the year. Going straight to the bottom line, you'll see that for the 6 months, we still have a surplus of $8,000. After a second month in a row, both November and December had distinct losses, 37,000 and 12,000. The reason for that is, as you might expect, that there are fewer productive days in those months. There are significantly more holidays in those months. So the ability to produce revenue is less. But that being said, offset by those 3 months prior where we have, the full complement of productive hours and produced income. So it's what we expect with a fluctuation throughout the year. In fact, I actually have it written down. Holiday time in the first 6 months of the year is 72% of that line. So it's very much front loaded and very much in November and December. You can see that reduction in income when you look at those first 3 lines at the top of the page. It's fully expected that in January, February, March, that those months will return to a profit or a surplus. And so I don't want anyone to have concerns that we have 2 months with deficits right there. But it really is just following the trend of available staff time to produce and build that revenue. The pages 6, 7, and 8 look similar to what we've done in the past. We have those 6 months presented distinctly. And we have all the detail of the different revenue and expense items. But we also added budget columns. The budget that you see to the right of the page is for the entire year. And the percent of budget is the percent that total year-to-date column is of that total budget column. So given that we're at a 6-month time frame, you know, the first level you would think would be 50%. So plus or minus 50% is where you get your fluctuation to budget. And you see in the first few revenue lines, there are lines that are coming short. The MPO, FHWA, that along with line 4201, the state share, you know, those are short of expectations at this point. But again, that's because of employee time that was spent on those grants. There's an expectation that that time, just by the nature of the calendar, will be more in the second half of the year. And so those revenue lines will catch up to what the budget is expected.
Question, I'm sitting here looking at this. I mean, obviously things are balancing probably, but I'm looking. Only we've gone through half the year and we're only at a third of budget approximately, both income and expenses.
That's correct.
Are we still expecting to come up to the full budget amount, or are we going to have rating
There are a couple of
at much lower level than we budgeted?
Yeah, there are a couple of items that lead into that. If you look on page 6, close to the bottom, revenue line item 4440. $1 million, but we've only recorded revenue of 13,000. That's the new grant for the housing initiative. That is just ramping up. It's expected that during these next 6 months, that we should have about $1 million worth of activity in that grant.
Yeah, but we will not be collecting it until.
Well, that's revenue.
That's okay. That's right.
There's a similar expense of $990,000, $930,000 on page 8.
All right. Does that come after or page 8? Expense. Is it going to be spread out, or is this something that comes right at the end of the year? We have to do the work first, or what?
It's reimbursement based, and what we've set up with our funded entities is we are like just in time. So we're allowed to submit quarterly requests from Virginia Housing. Our next quarterly request will be due right after March 31st. I think we have 10 days after to get our in. And so it would be money in and straight passed out again. And then the same at the end of June. So they are going to be in, I'll say
I don't
first.
get caught in a bind with a lot of expenses and having to wait months to get paid.
Yeah, we set it up with our nonprofit partners that they need to manage their own cash flow, essentially, and they need to submit their request for reimbursement as close to the end of the quarter as possible, because we are not going to float them essentially for 3 months.
We'll address that point as well when we get to the balance sheet.
Okay.
But that's a very good point to raise. It does look like we're well behind what we planned for the year. But given some of the seasonality of the specific items, we expect that the budget is still sound. Okay. And one other item on page 7. Group of salaries and wages. Look at 6101. See that it appears to be tracking ahead of budget. It's currently 62.74% of budget. But again, that is mostly due to holiday time being seasonal towards November and December. So that'll come back. You know, the rest of that amount is vacation time, which is actually behind it'd be surprising. So if you think about the calendar, January and March are 31-day months without with one holiday. Not a lot of vacation, so the productive time is that much more
On
significant.
vacation right now, where it's warm.
I know. So those are trends that we should expect to see. But again, the story for the 6 months ended December 31st, even though we've gone to 2, less productive months, is that we're still showing a surplus. And so management is watching, those lines, very specifically.
Question, Aflac, AFLAC, 43, is that a percentage or?
Account number 6543, Aflac. It's tracking the withholdings from employees for their Aflac costs. And then there's been some rounding where it leaves a few cents sometimes and showing that way.
Employees do it on their own and it's not reflected. What you're saying.
Well, it's deducted from their pay and then PlanRVA pays Aflac on their behalf. So it should net out to zero, but there's been, a couple of pennies of. One other line that I wanted to highlight. At the bottom of page 7, contracted services. That calculates out to be 96% of the budget. But there's actually a significant amount of revenue or of expenditures that weren't budgeted into that line. But that was the best place for us to record them. But they're actually pass-through expenses that are being reimbursed by our grantors. So that's something from, an analysis perspective we can get better at classifying, both in the budget and how we show it here. But I didn't want you to look down that line and see contracted services, having been spent. It's actually, for those items that were budgeted and are not being reimbursed from revenue, we're actually running slightly behind what the expectation is. Any other questions on the profit and loss statement?
What I'm thinking about is, and you see the significant amount of lead wages on line item 6101. You see $70,000 in November and December there, and I'm thinking maybe as we go toward the future, is it possible for us to accrue so that it's not hitting us more or less on a cash basis? Is there some type of accounting we can look at that would help us maybe knowing that we're going to incur it, maybe accrue it as we proceed through? That will be leveling out each month.
That's one of the elements that Marvin and I have discussed as to what is our budget strategy as far as collecting things in a particular month. Or do you take 12 months and just have it even and then analyze the pluses and minuses? We have made the decision going into this fiscal year to try to keep it closer to when the cash is actually expended.
Cash flow out.
Just so you see some of that natural fluctuation throughout the year. It's, there's two schools of thought on how to do that with the budget, within a particular year. And so your suggestion and your question is very, valid. So as we develop, probably the 23 budget, we'll think more about how we want to show those.
Because we know
monthly fluctuations, seasonal fluctuations.
Because we know we're going to expend it. On the question is when it's going to be reflected as though it's spent, which means accrued. And so that's something we may want to consider doing, since those can swing profit or loss, if you will. So it's something I think we'll maybe look at doing. We'll discuss it, finance committee, we'll think about it some more over it, see what they think, but I think it's worth considering in terms of philosophy.
Certainly.
Okay, we'll think about that. Makes sense?
I rely on your expertise on that, Jim.
Yeah.
Got more expertise there.
Yeah, I was just thinking, I'm just trying to see it smooth out more so rather than showing a 1 month where we have, you know, 2 or 3 months of loss and 3 months of gain. And that's one of the principal reasons for it. As well. But we're trying to look at how we do smooth it out, the expenditures. And
Martha also
that
has
may
to
be-
work with Cash flow, though.
That's the
Not
other
just
side
that.
too, the cash flow. I don't want to disturb that either in terms of the quarterly billing too, Martha. So anyway, that may not be as practical. My thought may not be as practical given cash flow and your impact on that. So I'm not saying change, I'm just throwing it out as, you know, what your thoughts on that. That's all.
But there's another way to handle it too, by changing how the report is structured,
Okay,
so that you can see what's, you know, your monthly fluctuation versus what is kind of normal. So there are things that we are discussing as to how to make, you know, this picture clearer,
yeah,
so that that monthly fluctuation is a little bit more valuable and easier to understand, but yet easier to understand.
Cash flow wise, that fluctuation is important.
The fluctuations for management purposes are very helpful, but
Yes.
obviously for reporting purposes, you know.
Yes.
It's a little bit different. So
Right.
I think we're trying to create. How do we use, as Dan's saying, so that everybody's aware of what's going on.
okay, yeah, okay,
But just to, you know, reassure a little bit and follow up, you know, what we're seeing through 6 months next to budget is still positive.
yeah,
We
it is.
expect to the end of the year against this current budget, you know, there'll be some changes, but we're still expecting to be, you know, in good shape. Not results.
Why is it there?
There's a particular fee that was in August. Regular bank fee is monthly, but I think our investment fee is quarterly. I forget exactly what was part of that $400. Yeah, on the investment account.
So there is an investment.
Yes, there is. We have an operating checking account and account that we move money into. That's according to policy.
We just don't pay you.
There are investment earnings. See that as revenue on page 6 at the bottom. 1001.
So we made $474 and then paid out.
Right. That's the timing of when those items came through.
Interesting. Or suddenly.
Is through LGIP, Local Government Investment Program.
Overnight and some of the month.
That's just, I wish I remember the details off the top of my head, but you know, there's one account where there's a regular interest every month. But then there is one where there's, you know, any other questions on the profit and loss before we highlight an element on the balance sheet? Moving to page 9,
Okay.
this is the balance sheet. It should look a little bit different than prior months. What we did was we changed to the balance sheet that's on the modified accrual basis of accounting. You'll see this in the CAFR. It is not one that is on the full accrual basis of accounting, which is also in the CAFR, but that's newer to the statements. The reason that we made this change is because the only difference are long-term assets and liabilities. So your fixed assets or your pension-related items, the assets that are to PlanRVA's benefit and the liabilities. Those items do not change or are not measured except at the very end of the year. So showing that type of balance sheet just doesn't change. We thought that it was more valuable to actually put the governmental fund balance sheet that's on the modified accrual basis of accounting in front of you as compared to where we finished our last fiscal year, and then show what the change is. That way, when you look at the balance sheet, you're seeing items that are a little bit more dynamic and reflect operations a little bit more closely. Certainly at the end of the year, we'll take a good look at that full accrual balance sheet because that's important as well. But we thought that throughout the year, the more important part would be to focus on the items here, especially the cash and cash equivalents and how it fluctuates throughout the year. That very top line, the grants receivable, and discussed this before, kind of that nature that accounts receivable are accounts that have actually been billed. And so reimbursement has been requested. Accrued revenue are revenues that have been earned, but have not yet been requested of the payers. So essentially what you will see is when revenue is first earned, it's reported as accrued revenue. When it's then billed, it reduces accrued revenue and increases accounts receivable. When that receivable is received, paid, you get the increase to cash. So those three numbers will float together.
The reason due from CBTA is not either accrued revenue or accounts receivable.
We hold that distinctly just because of the special relationship with CBTA.
Should the TPO also get a separate line item?
Well, the TPO is actually follows the pattern of being accrued every month and then billed every month. But the CBTA, because it's a newer relationship.
How does CBTA pay? Is that paid quarterly?
Yes.
Cash is received quarterly.
And I want to just clarify a little bit, the expenses that are incurred for staff time in support of CBTA are not in the due from CBTA. The due from CBTA is the billing that we undertake on behalf of CBTA. Since we're not the fiscal agent, we hold it in the due from. So that would, as an example, we don't pass those through our operating accounts because that would be essentially accounting for those expenditures as ours when they're not. So the due from is really for us to be able to isolate those expenditures that are specific to the CBTA and have nothing to do with our operating versus the billing that we submit to CBTA that's including the staff time. So there's sort of two things going on there with the invoicing to CBTA.
As you see, right now, as of December 31st, we have $1 million in cash. Whereas at the end of the year, we had finished with just shy of $500,000. And the reason for that is the collection of member dues and that type of revenue early in the year. So the cash balance rises very significantly in the first half of the year. And we would expect that balance to be reduced as we spend those funds. So that's one important element on the net change between those two numbers. Accounts receivable and accrued revenue, those numbers will change in relationship to each other and in relationship to the prior year end, just based on what we're billing at the time. The important thing to look at there is that neither one of those numbers grows too large in comparison to each other or in comparison to the prior year. if that circumstance occurs, that means you're not actually billing or you're not actually collecting that revenue that you're earning. So you're not turning your activity into cash. So that's one important element to see in this. In the liability section, you see accounts payable, accrued salaries. Those are just regular operating items that are paid, normally actually very soon after the month. And deferred revenue, that's cash that's been collected, but we haven't earned the revenue yet. So we have $359,000 of essentially cash that's been received already, but we haven't actually earned that revenue. Remember, dues is the significant portion of that. A couple of quarterly grants that we received early in the year will be part of that. But essentially what you see there is $274,000 increase that's been received by the commission. It's held in cash. So you're not going through a billing process. You'll see that number go down as we earn that revenue. Essentially, the switch to this kind of view is so that we can track how we earn revenue. When do we actually bill? When do we actually turn it to cash? And so keeping that cycle in mind is, one of the important parts of this, the change to this view. And the other part is to highlight the fund balance. As we know, the commission has a goal of maintaining $1 million in its governmental fund, unassigned fund balance, and we're maintaining that balance. Any questions on this statement or anything that I said?
One question is, I notice we don't highlight now. I see the presentation, we don't highlight fixed assets. Depreciation. We're not highlighting those, right? We removed that all
Not on this. We'll do that at year end.
at year end. Okay.
Anything that's spent for fixed assets
Mhm,
on this basis of accounting will show through your profit and loss statement.
mhm.
Sure. So you'll see the cash and the expense show through. But given the basis of accounting on this statement, those numbers don't change much throughout the year. So to simplify the reporting,
Okay, I see what you're doing. Any questions from any other comments on the balance sheet? Present. That's fine.
Chairman, I'll move that we recommend acceptance of the financials as presented. The commissions to the full commission.
Second, thank you. Any discussion? All those in favor, sign of aye. Aye. Next item is item B, finance staff proposal, page 10.
Yes, this is starting on page 10. This is really just an information item for you today. I know we are interested in getting to the other items on the agenda. We share that, as you know, we're continuing to evaluate our needs around financial management. Dan has been doing a great job and actually will be rounding the bend of 1 year with us in the coming 60 or so days. I think you started in March with us last year.
essentially March 1.
And so just wanted to be able to put this concept before you. It's not in the form of a proposal at this point, but we have been having conversations. I have been having conversations with my colleague Alec Brebner at the Creator Planning District Commission about the possibility of essentially joining forces for recruitment of a CFO level position that could support both their agency and the Creator Planning District Commission and the Tri-Cities MPO and this organization. There's certainly a lot kind of to be determined at this point. I think over the next couple of months, we'll have some more clarity about expectations of PlanRVA in support of the Central Virginia Transportation Authority. And so At this point in time, I think we want to know that information before we would move forward. But I wanted to be able to just put this before the committee to digest. Perhaps it could be an agenda item for discussion the next time we meet as we prepare for next fiscal year. But certainly we want to kind of monitor our needs and make sure that they're being fulfilled, but also to think to the future about what future demands of finance personnel. Obviously, we have Diane in full-time permanent position, full-time regular position, I'll call it, as finance manager. And then Dan, as you all know, is contracted through email Vaco Finance right now. So as our financial management needs are further kind of identified over the next couple of months, I think we want to try to figure out what the most efficient and effective way to do that staffing would be. This is one option where we could look at partnering with Creator in sort of a shared staffing resource for that CFO level position. Going forward, Alec is having a similar conversation with his executive committee. And so we wanted to make sure that those conversations were happening on parallel paths, and certainly recognize that both Chesterfield and Charles City County are dual members of both PDCs, which was another reason why we thought,
Charles City? Is it
Yes, sir.
doing it too?
yes.
I did not realize. Chesterfield was on the one hand.
Yeah, and in fact, Michelle Johnson is the administrator from Charles City, is the chair of Creator right now. So
No comparison between.
Yeah, that was my
PDC
question.
And Greater
Yeah.
PDC.
size wise, I'd have to research what their budget is and talk to Alec about that, but size wise, they have 7 members of staff, I want to say, thereabouts. So significantly smaller in personnel. Their scope of services is a little bit different than ours. They run the regional tourism program for Petersburg area. They also are involved as an economic development district, and so they have a different kind of mix on some of their grants. But they do have a lot of overlap with us. Their MPO administrator administer a lot of the same environmental programs that we do. So there's some overlap, and then there's some things that would be different. Probably the most noteworthy from a financial management perspective is that through their economic development program, they have a revolving loan fund program where they lend to businesses and return the proceeds from that and lend it back out. So from an accounting perspective, as you can imagine, that would be a very different type of management activity, which was called out more specifically in their section of the position description.
No, I don't. I have colleagues that do. I think Mr. Winslow, Mr. Harold, and maybe Art Warren was serving on that. He still serves on that. But I did maybe many years ago, but I can't recall. It would be nice if what we could do in addition to, I think the point's well taken, to take a look at, have their financial, if it's possible to have their financials, so we can look at their financials, since we will contemplate partnering with them. As you know, about a summer or so ago, we did FOLA, where we took over the accounting for some of Crater's FOLA activities, as I recall. Is that, do you call
Yeah.
it? On that?
Yeah, we have a 3-way partnership actually with FOLA, Friends of the Lower Appomattox River, and the Creator PDC.
Great.
And one of the dedicated staff members here on our team, Heather Barrar, spends 100% of her time, I'd say about 90% of her time actually, in service to Friends of the Lower Appomattox River. She's our staff person, but she really leads the effort to be able to implement the master development plan for the trail project down in effectively in the Creator PDC, but segments of it are in Chesterfield County.
Okay.
We're providing kind of the staff
Staff
personnel
support for
capacity.
it. Yeah, staff support.
You're saying that neither people a full-time person on this.
They're in the same situation that we are, where they have dedicated resources in I don't know the title of a person, but a person, similar that manages the day-to-day operations, the accounts payable, receivable, the payroll, those activities, but that CFO level position is not filled in either of the organizations. And so the thought was that Creator, Alec's estimation is that he needs that resource about 2 days a week, and we need that resource about 3 days a week. So when we started to talk and compare notes and found that out, we thought that it might be a worthwhile pursuit to think about that shared resource.
The CVTA does not use us for finance, that aspect of CVTA, that's done through Chesterfield.
Yes, so Chesterfield County is the fiscal agent. We're still handling the, I'd say, general accounting responsibilities as far as the operating account for CBTA.
That
So
would be affect the CFO.
the CFO would have, I mean, Diane's doing that work right now.
what I'm
So they'd have like oversight responsibility. I would say, more specifically, the service that the CFO position would provide to CBTA would be the work that Chet or I am doing right now. Probably would be able to assist Chet a lot with the financial forecasting that he's leading for the authority. Similarly, I'm the, I guess, prime, you would say, on convening the finance director's work group and those activities, supporting the finance committee. So I think we would look for this to be an additional resource to share that load.
It's an 80-20 split,
Yes.
2 days and 2 days. 40.
C40, yeah, I mean, I think it over the course of the fiscal year, you know, it would ebb and flow a little bit, but the percentage that was described in the position description would be about what we'd be looking for. 40 is to 1 day. I think on
Are they in agreement with this?
still just being under, it's under
They are
discussion
still
there
looking.
as well. Yeah, so this is not a proposal at this point. It's a concept, but you know, Alec met with his executive committee last week, I believe. And it seemed like it was important. I've been talking with Mr. Winslow about this and Mr. Holland for a bit, but it seemed like it was important to have this on your agenda. Again, not for action today, but just simply to be able to have as a concept that we.
Another RFP for it.
This looks like. the whole
His
thing.
staff did that, yeah. Yeah, I talked with Matt Harris, who I think is pretty well positioned. He's the deputy CAO in Chesterfield County, so is familiar with both of the organizations and obviously is familiar with the scope of what they're doing with CBTA as well. His suggestion was that for this type of a position, the range would probably be between 95 and 110,000 a year. So it would be competitive in the marketplace. For point of reference, just to be candid, that is high compared to what we have paid for a position in our agency and, you know, 100% funded internally. So it's definitely very high compared to what Alec has historically paid. So the thought being that if we could cost share on that higher compensation position, that would help both of our agencies financially.
Just remember, it's been years ago, though, this organization, your top price on something like this was like 103 or something. But it's been years. I truly do.
Cautious about one thing. If we hire somebody to work for both PDCs, we have a really clear division of responsibilities of who's getting what services. I can see this easily getting into a little mess of who's paying and who's getting services and when, and particularly with the services being so different from the. Don't really have a problem with having a joint person as long as you have the responsibilities very, very clear as to responsibilities to the two different organizations. But you get a person torn between two bosses, you got a problem.
I'm glad Mr. Gregory is here today because I know that that's something that we've talked about before. Where the details are incredibly important to everything that you're talking.
Yeah, I share your concern here in that regard as well. So certainly, are there any issues that we might be faced from state law? And state laws prohibit us from doing what we need to do. Can you think of any of the things we will have really in regards to considering that, contemplate that?
Well, this is a conceptual, so I need to look at it a little bit further, but
Okay.
state local agencies share employees on a regular basis, in these kinds of contracts. I think things that I'd be careful about would be, how it's, and how those are structured, how to kind of thing, but I think all of that can be worked out through an RFP, or rather a memorandum of understanding or memorandum of agreement between the two agencies. So I think those questions could be answered.
Okay.
But the question today is this a concept that you even want to entertain? If you want to move forward, then we can work on answering those questions in a satisfactory manner.
Yes, sir.
We
Yeah.
do know that from our 2017 federal recertification review that our federal partners, at least on the transportation side, are looking for any opportunity for Richmond and Tri-Cities to cooperate and do agreements and MOUs to move forward both of our organizations together. So that would be a positive, I think, if this was an outcome.
Okay. Yeah.
I think taking advantage of that, I think it's a good idea. It's just like I said, format. I'm just wondering if it would, because of the difference in scale, would it be better for us to hire? So, and then they reimburse us based on
Reimburse
the
us.
usage,
That was,
but then we would be, there'd only be
So,
one boss.
One boss,
that
one
was
pay
the
will pay.
structure that we had contemplated in talking with Alec, that PlanRVA would be the employer. We would assume responsibility for the payroll and for the taxes and the
Right.
benefits provision. And then we would be then a service provider to Crater Planning District Commission and allocate a certain set of hours based on an MOU to the Crater PDC. I think in candor, we felt in fairness, that if we were to go forward with a recruitment, it would be important to let candidates know that structure going into the position as opposed to finding out after they came, because in that structure, there would still need to be ability to the Crater PDC, them as almost like a client, if you will. And so, but I agree wholeheartedly, we would not want to have a situation where we were trying to take two part-time positions and fill it with one person. We would want this to be a full-time employee here, and then we're just simply providing a service level to Crater. Eric, am I getting the gist of the conversations we've had?
That's what I would recommend.
Thank you. Yeah, I agree, and be reimbursed for appropriate hours or a time slot. But there'll be solely one boss, as you state. I think that's far better, a way to account for it and to have the oversight. And therefore, again, I'd like to see some of their current financial structure, if we would, before we, concept, I'm sure, but before we make a decision, we want to look at that as to what we are dealing with in terms of financials. Next time, the board, if committee meets, it'll be excellent, okay? That'd be great. Any other questions or comments on that?
We've done it before.
Okay.
So, what the pitfalls are. That's one thing.
Fair with what Mr. Peterson says, that if you have and Mr. Gregory also, one person works for this sublet that person, so to
Yeah.
speak, to Crater. And that way we maintain, there's not any confusion, because it will come if you mix the two, it will happen.
Yeah.
When it. That we really don't need, we can avoid. So I would support.
Yeah, I'm in agreement with you. I'm in a total. Enforcement wise, it could be documented in a memorandum of understanding. Okay, any other comments? All right, Martha, is that
All on that item, yes.
okay?
I'll just. 2022 budget review, many of the questions Dan answered in the presentation of the financial statements. We're getting details by the day. I think our meeting is scheduled for Friday to talk through what the cash flow needs are going to be for the housing grant. As he mentioned, that's a sizable chunk of that variance in the budget. So concrete material before you about what those projections look like as far as revenue and expenditures. So those are forthcoming. We've had some minor shifts in grants. For example, I know we'll have a reduction in projected revenue on the rural transportation program because the MPO boundary was expanded. You all remember that. So, I mean, there's a couple of things like that, but overall, most of our funding streams have held. The grant awards that the grant applications that we've submitted have been awarded. So all of those things are frankly very positive for us in this coming fiscal year. So it's just going to be a matter of sitting down with our team leads and seeing what is going to get completed this fiscal year versus what is expected to get carried over into fiscal year 2023.
Question, I was not able to make it to. Hey, did anything take place there that would affect us in any financial way?
Joe was very kind to PlanRVA in his remarks, but yeah, it was a very nice event, but no changes to our relationships or operating. Yeah, they did a nice job with the event. Mr. Partnerships on the board.
Oh, yeah, I did. I did. Okay, excellent, excellent. Thank you.
It was a nice event, but there was no.
I have they sent out a link where you click on it, see it.
Oh, yeah, okay, the recording, okay,
I
Yeah.
haven't looked at that either.
yeah,
It's
it was a nicely done event, they did a good job, yeah.
That's not good.
Yeah. Bit of
I was at
a
another meeting.
tricky day to be traveling around the region, but Mr. Chair, that's all I have on that item.
Okay, very good.
So whenever we're ready, I will say, we did schedule the closed session today to be able to discuss the office space leasing. I've got a pile of materials here, and I know that we have one person on the line that's part of Brian's team that will be, so once we go through into the closed session, we'll need to reset our technology, but other than that, when you're ready.
Okay, now we're ready to go into closed session. Let me read the statement. Action requested, motion that the Finance Committee convene in closed session pursuant to section 2.2-3711 29 Code of Virginia 1950 as amended for the discussion of a public contract involving the expenditure of public funds and the discussion of term or scope of such contract, where negotiations in an open session would adversely affect the bargaining position or negotiating strategy of the public body, on which all recordings in the meeting will cease. May I have a motion to go into?
Mr. Chairman?
Yeah.
Could I suggest that the motion also include a reference to FOIA section 2.23711A3, which is all included on the agenda, which addresses the acquisition of real estate for a public purpose, which also would include a lease, which is part of the discussion.
Okay, we'll add that as a friendly amendment to the motion to go into closed session, okay? It's been, so we have a motion. Move to go into closed session. May I have a second? It's been properly second. All those in favor, sign up.